Hello and welcome to the interview with me, Aisha Faridi. Today, my guest wears two hats that rarely sit on one head, one of India's most awarded IP lawyers and one of its most widely followed voices on equity markets. Safir Anand, he's a senior partner at Anand & Anand, ranked among Asia's most innovative lawyers by the Financial Times. But on his Twitter account, or shall I say X account, he's known simply as an investor who spent decades reading balance sheets as closely as he reads brand law. He recently authored the bestseller Confessions of Stock Market Wizards, where he got India's biggest investing names, Ramesh Damani, Sameer Arora, S. Narain, Ramdeo Agarwal, Vijay Kedia, to name a few, to open up about their mistakes and their learnings from equity markets. So who better to turn the mirror on? Safir, welcome to the interview. And looking at you, I should have said not many hats, but many different glasses.
Hi, and thank you for such a lavish introduction that now it puts pressure on me to do a good interview.
That I'm sure you will. And, I really wanted to always, Safir, start off with the process itself of investing. When Safir Anand puts money to work, what actually triggers the decision? Is it just a number on a spreadsheet? Or is there a psychological trigger that tells you it's time to buy?
See, my competence lies more in trying to understand the business and whether the business can be scaled. And if there is a scalability component to the business, then the quality of earning becomes paramount, because the earning could, for example, be at a minuscule margin, and you could have scalability, but without any meaningful cash flows or some distortions because of one factor or the other. So if the business is scalable and there is a tactical shift that is moving towards the business, then a lot of value is created. Now, this tactical shift could be from a small cap to a mid cap, from a mid cap to a large cap. It could also be reversed, a large cap becoming mid cap or a mid cap becoming small cap, or sector centric or company centric. So my ideology is that I want to find companies, not bother too much about market index level, that is Sensex level, Nifty levels, XYZ expiry. And if I find those businesses, to try and spread the buying over a certain period of time, so I'm disciplined and hope to reap benefits from that.
Safir, you've always been someone who's read nuances and observations on ground. Do you think more practicality or the practical head tells you more about investment than any balance sheet, in your experience now over the years?
Yeah, I personally think behavioral science is a better friend for the investor, because even the most sane people, react to news and literally decipher things there at the spur of the moment, which is not necessarily with determination of what the business is doing. For example, if you have a competent entrepreneur, then we assume the fact that the competent entrepreneur is going to be demolished by certain change, which he himself, has the wisdom of a sounding board to address those problems. And he's not unique in that boat, because if those problems come, they usually come for many people. He's equally well-read, and he's also got, sound systems. And therefore, the question is there an opportunity in terms of an excess reaction, which could be on the upside or downside? And timing is extremely difficult for the market, but buying a stock by segregating the timing over a period of time can be a wonderful tool to make a meaningful impact on the long run.
But Safir, in addition to that, I've always been curious, because you're someone who's interviewed a dozen of India's biggest investors for your own book, right? If you had to borrow one habit from each of them for your own process, what would it be?
I think personally, I want to be more humble, because what happens is that sometimes you get carried away by the success of what you have done yesterday. There may be a stock in my portfolio that has done tremendously well, and therefore, in terms of a financial impact, it may have bettered me. And therefore, I don't want to be in the pool where I make an assumption that I will not make mistakes, which is why the entire book and the emphasis was on mistakes and behavioral science, and how we can benefit from the wisdom that different people from different backgrounds carry. And I'm trying to apply that to my thought process. So now even if I'm negative, for example, on a sector, I come and say that I'm negative basis a certain set of assumptions, and any fact change within the set of assumptions will cause me to change my thinking. And if some change is visible to me, then I may start exploring that change, whether it can become a catalyst or whether it is just a passing phase. And therefore, I have no hard and fast rules on what I will like in the future, or what I liked in the past being something that will always carry me in the future.
So I want to talk about the today and now, Safir, because it's getting very tricky in terms of how you invest and when you invest, more importantly. How much weight do you personally give to news flow on a given day? I mean, do you also, much like us, because our job demands that, do you wake up and check out the GIFT Nifty, the FI, DI data, a rate commentary, versus how much of it you think, you want to tune out completely?
No, I'm grateful to people like you for carrying news, for the reason that news from your side is a sharing of information. From my side, it is the sharing of impact. And news on a particular day may not be as relevant. For example, yesterday the markets were down a lot. Today, they're relatively better. Talks will keep going on between countries. But interpretation of news as a trend over a period of time, vis-a-vis the behavioral reaction of the market, could make a great case for timing. So, for example, I personally felt, and I'd even tweeted this at the risk of not being an advisor, that in March, I cleaned up my bank account and bought the market left, right, and center. And it was possible that April did not turn out to be a friend, for example, or May ended up being stressed. But then the question was that I was not buying with the objective of making money in April and May. My first reaction would have been to look where I would have been on 31st March 2027. And as long as that money didn't hurt me in the sense of, causing me to skip a meal and not get sleep and other things, I felt it was fine. And I think there was an overreaction in the market because all the commentary was on doomsday, whereas it is a human tendency to find a solution, not to keep adding to problems.
Interesting. So walk me through that time around March 13th. The last big buying window as we know it from the current ticker screen. Walk me through that day. What made you pull the trigger when most people were paralyzed looking at where crude was, the news around West Asia, and what our own markets were up to?
So for example, when you are a habitual reader or you're an observer of things that are happening in the market, and I don't mean stock market, I mean market as in consumer market, you normally have a list of companies that is floating in your mind that are attractive to you, but maybe you did not buy them because you didn't have money, or maybe the valuations were too stretched, or maybe the fact that they were too much in the news that time. You just missed the opportunity while you were deliberating, and some big order came and they ran up a considerable amount. So essentially, that subconscious decision of what you want to buy, whether it is a sector or a company or is already in your mind. Now, when the markets fall, they start bringing those energies towards you and saying that something that you wanted to buy, it was your wish list, is now approaching you. And only question that you have to do is that something that is a temporary phase, or is it something that is going to be long-term destroyed? I'll give an example that some years back, it's been now a sizable number of years that I have not owned large IT, but I did own pockets of mid IT, just as an example. But at some point of time, in three digits, a large IT giant or a market leader, which may be, just as a proxy, you'll come and say that, others management's now not going to be listening to the fact that they need to get into a technology shift towards AI. And then the real question is that how do you map your expectations? Now, if I map my expectation and say, can this stock at a bare minimum beat inflation, at a bare minimum beat a fixed deposit, and probably give me something like a 13 to 15% return, then I will, and if the market noise is completely against it, then I will say that maybe I will start off, and either I will pay the price of timing being wrong, which is therefore I will have a phased manner of buying, or it will start supporting me and encouraging me by fact validation, and I will build up on those positions. So again, it's behavioral science where noise and signal are two different elements, and you sort of start looking at eliminating the noise and looking at possible signals.
So basically, as people in Mumbai say, bhav bhagwan che, right? When you saw Infosys falling for that one split second into 3 digits, you thought that's a great buy.
In fact, I did buy. So, yes, you are absolutely right. And the point is that, this is where I'm trying to say that if I did not own this particular example for certain years, it's not as if it is out of my life. It is there, very much there. It's just that I had something better to buy. And similarly, if I have a better opportunity tomorrow in respect of any particular sector or any company, then I will have to explore whether I have the money to deploy, or I will use an existing stock to encash and generate the money and switch over just because of a better opportunity.
Safir, the world and especially India and the investment climate is changing just so rapidly and so fast. I remember during COVID lockdown times, it was all about shut businesses, tourism, aviation, because those businesses were available at mouth-watering prices, right? And then you had that entire IT and consumption K-shaped recovery, which sort of led the markets. From there to now, the world is so different. I mean, IT is something that you would buy only if it's at the bottom of the heap in terms of valuation and that one odd chance that you would get, like we just talked about. But it's now about renewables. It's about AI and the quasi-AI trade here in India. It's somewhere about pharmaceuticals and healthcare as well. From the current pool of what the market has to offer, what were you tempted to buy in the March lows?
No, so again, if I don the hat of a consumer and I sort of sit in an independent room and say that, I have to make notes on where I see tactical shifts. First, I would, take a pen and paper and write down those particular sectors or segments where I see a tactical shift. Then I will have to evaluate within the sector which company is making a sizable difference, or a company that may not be the leader and maybe probably the third or fourth, but is cheaper in respect of what it is doing vis-a-vis, and maybe not losing market share and sort of trying to build on the competencies that the leader has. For example, in the past, I remember a chat on your channel itself when we identified and spoke about hospitals and how the entire system of ATM access will become available to people in tier 2, tier 3, and they'll have access to top doctors, and how the foreign money was, trying to acquire a large number of hospital chains. And, we got lucky with that sector. Your viewers got very lucky. I think the minimum return that we probably got in a hospital stock was about 10x. And thereafter, data centers, where we spoke about at the time of the union budget, where our finance minister herself was speaking about data centers and how it was a priority for the government. And in 2022, many of these data-centric businesses were very cheap, and so were the suppliers of power and water to these data centers. So today, when I sit back and I ask myself, what is happening, there are certain sectors to me, at the risk of being wrong, that appear to be quite tactical. The most obvious of them is e-vehicles, and therefore anything that eliminates pollution. Then, if I identify a sector like this, my question is going to be, where is the transition going to come in first? And it appears to me that it is easier to transform public buses and public trucks rather than impose a condition on an individual like me who may have a preference for a luxury car and therefore may not entirely go the way of buses and trucks. And then you identify a few companies that are making these products and say, is the market being fair to them? Or is the market, in its wisdom of correction, punishing them also, which may be right for the time being, but which may not be a story that plays out in the long run? So e-vehicles is just one example of a theme. Commercial e-vehicles is an example of a theme. Similarly, for example, if say a two-wheeler company, today the market may react to rains and say that rural India may not react the way that the company's quarter is expected to be in terms of sales and all the data that comes out repeatedly. But the question is that many of these companies are also transiting into e-vehicles. And motorcycle is a very strong mobility segment. Motorcycle and scooters are very strong segments. And some of these companies are well placed in terms of technology, and they have invested heavily into e-technology. Then my question is that I will go beyond a rainfall effect of a quarter or two and start looking at where the value emerges. So again, that was an example. I can give you many such examples, but then I'll end up talking like non-stop.
Please do, and throw in those names as well. But what gives you conviction on Ola still? If I'm guessing that's one of the names that you talked about.
I'll give you an example of a company that I have owned for a long period of time, which actually I had bought it at the time for a different reason when there was an ED action on them, and I believe that the governance standards were good. Which a company, for example, called Hero MotoCorp, or for example, if there is a correction in the market, a leader like Bajaj or TVS, I mean, they're very clean in my mind. So the only question I have to see is the transition. Now, Hero itself is invested in Ather, and I own Ather as well. And Ather itself is doing a tremendous amount of business. Hero's market commentary talks about the fact that more than 90% of its business in 2027 will be centric around e-vehicles. And this is before the Delhi government announced the e-vehicle policy. So I would assume now the management will move that 90% also to a 100% mark, because they cannot sell petrol and diesel, beyond that. And then the question is, Harley Davidson keeps coming back and saying, I want to do more business with you. And they keep doing more businesses. And then they go to Tirupur and set up a global parts plant and things of that sort. And I also get a reward in terms of the company, in terms of a dividend yield, which therefore gives me the ability to think that, my ability to beat a fixed deposit or inflation is sort of reduced because of that behavior. So that is just an example. And Ather's market cap going up is, I don't even think, to be fair, captured in the dynamics of this trade. And then also have safety, which means that I'm not buying a sort of an unknown company which will sort of blow it up and somebody will say I'm, packing up the company, etc. So I'm sort of even more encouraged by that factor. So that's just an example. Similarly, there are companies that make buses, and they come on channels like yours, and they talk about a lot of vision of what they're doing and the standards. And I'm very encouraged when I go to the road and I see that even today, say because of heat wave, somebody gets the ability to sit in an air-conditioned bus, and it doesn't come at an economics that is so destroying for him that he lets that bus go and he wants to wait for a non-AC bus. There are people, for example, who do take to that segment, and and now Europe, for example, is talking about air conditioning problems. So public transportation in this respect becomes far easier as a play. In the March correction, since you were so specific about March, I felt the EMS companies came tumbling down, and it became almost fashionable for people to come on Twitter and say that look where they've fallen from, without looking at the fact of where they grew from. So the journey of an entrepreneur is always going to have phases. Now, at the correction, I have to determine that is manufacturing totally destroyed? And most sensible papers that I read will talk about how AI is actually going to make manufacturing more effective. At that point of time, oil was also at a peak, $125 plus, and you'll say that, maybe it can go to 150. I don't have that ability, but my personal take was that the world will unite to bring oil down. And if oil comes down, they will also, end up benefiting. And then the government of India repeatedly makes emphasis on manufacturing and keeps talking about how innovation should set in and how manufacturing scale should go up, and FTAs are being signed with emphasis on manufacturing and many such things, including possibly addressing ease of business. And then you come and say that, look, I think the valuation has become more behavioral now than disruptive in a true sense. And therefore, as an example, in March, I bought some of the EMS companies. Now, what happens is that suddenly then somebody comes and discovers that, there is momentum, and first the traders come in, and then the 200-day DMAs and other things come which go beyond my competence, but generally. And then research reports start because somebody says you've got a subsidy or you've bagged a big order or something of that sort happens. In fact, some of them got upgrades now, but they've all moved up 30 to 50 to even 70 to 80% from March. Now, I may not sell today until and unless the valuation starts pinching me. But if the orders dry down or the execution gets delayed, etc., then I have no loyalty towards stock in perpetuity. I will have to obviously explore my returns. So that became another theme, just to give you an example. Now, in March itself, companies that are into purification of water and they cater to, the data centers throughout need a lot of water to cool down. And then there is a lot of technically pollution that can be created. And those companies that are into water purification, the market leader, particularly in that segment, got bashed out for just for the fact that somebody is, in panic mode and he feels the market will go to XYZ level. And I'll say that maybe it goes to XYZ level, but this company's trajectory appears to be strong, and therefore you bought the same stock. Actually, there's a stock that I spoke also about on your channel as an example. And then suddenly, just 2 or 3 months later, the stock is up another 50%. Now you again have to come and say that should I remain parked, or should I just take that money out, or should I maybe something great has happened with the company. So there are endless examples. In fact, I have a list of about 10 sectors that look appealing to me today. But the question is, my homework is not complete on all those 10. Like, for example, I like organic foods. I feel people are wanting to have pure food. They're worried about adulteration. The FSSAI started crackdowns and other things. But organic food is not a label that just basically says that we did not, utilize these preservatives on the food. Many of them may be unlisted. If they're unlisted, they may be actually selling on a platform. Maybe QSR delivers them faster than somebody else, and therefore you'll come and say that I only have to find the axe and shovel theme and find my proxies there if I don't have a direct play. And one day when a direct play gets listed, and if it is credible and if it is affordable, then I'll buy it. So there are many such segments that are very, very interesting even today. AI itself, there are software companies in AI, but they are being labeled as software companies as a generic label, notwithstanding the fact that their specialization is in AI. And the market is bashing them as well. And therefore, maybe they are good pockets themselves.
You've given us so much food for thought. But the only question now sitting in July is that March window has come and gone. These all seem to be structural themes. In hindsight, if you bought at March lows or added up to your position in March, was a great call. But some of these stocks, look at an Ather itself. It's almost 4x'd since 14 months of its listing. And I'm not even talking about Apollo Hospitals and many other stocks that you talked about, or sectors and themes. Does it make sense to buy them right now also and ignore the valuations? Because quality will always be expensive. As an investor, do I rationalize that in my head?
See, I'll give an example of a company. Again, this is only for illustration, not for the purpose of any recommendation, that I spoke about on your channel, which was Max Healthcare, and it was, I think, 90 rupees when we spoke. Today, it may be 1100 odd. I don't know the exact price. The question is that I have to see that it doesn't bother me, for example, in the last 1 year, the stock may have given 0 returns, because I'm not standing for the last 1 year in the stock. I maybe have already made my 10x in the stock, as an example. Today, I have to address that, is there a scope of what is happening on the medical side? Now, on the medical side, I don't want to read research reports that predict the price of that stock, because that prediction assumes a lot of variables that may not be in my control and even my competence, and which may change because of the factors around the world. What I genuinely see is that there is a market that took to anti-obesity drugs in a big way. Therefore, people are very fascinated by looking thinner and whatever things. But these do not address the problems of dialysis. They do not address the problem of diabetes, and they do not address the problem of cancer. And these are very serious menaces to mankind. Even today, there is no concrete evidence of treatment in some of these. There is, you can sort of maintain it, but you don't completely go free so easily. And cancer you do if you are detected early, but not as if you're at an advanced stage and miracles happen. You can prolong it. So the question is that medical science still has a lot of trajectory in terms of preventive. It still is adding beds. There is still a lack of availability of good hospitals in many parts of India. Some of them may exist in a city, but they may be 50 kilometers, 60 kilometers away, which may be very fatal to a heart attack, as an example. And therefore, you will start looking at what the medical fraternity is doing in order to bridge that gap. And even today, acquisitions are happening both in terms of foreign money chasing these hospitals and therefore are trying to acquire them, as also institutional money. If you look at Max itself, in I think last few days, institutional activity has been reported in Max. So the question is that they are coming at this level, they are reading, perhaps they've interacted with management, or they've understood something that is to their knowledge. My point is that I'm also sitting with what is called as the margin of safety. So even if I get knocked off by a 50 rupees from here on a stock, it doesn't bother me if, as long as I feel that I can make my returns ahead. In Fortis, for example, the foreign promoter, which is a Singapore-based promoter, is actually trying to sort out all the legal mess, and yet is talking about the number of beds that is added. I can give you so many examples. The only point is that I'm, again, from the regulator's perspective, I don't want to sound as if I'm promoting a stock, and therefore I'm more centric around the sector.
Not at all. We're just trying to understand your investment thesis. But Safir, that's exactly the point. It doesn't pinch you if Max doesn't do anything for a year, or even if falls down 25%, because you bought it at 90. And many other stocks because you timed it right and got in cheap. Would you say that that's the most critical aspect of investing, to buy the stock, but buy it right at the right price?
Yeah, hopefully to buy it right. Of course, I also make mistakes. I may end up buying a dud stock, and it may turn out to be dud because the management is, doesn't have the aggression, or it is overtly aggressive, or it is overtly fascinated by the stock market, and therefore keeps doing endless QIPs or their interpromoter activities, etc. In which case, since I said it's a phased out buying, the cost of getting that wrong is minuscule, and therefore it starts bothering you and you start looking at an alternative. Now, since as an example you spoke about hospitals, medical tourism is a very big sector, and there will be a lot of inflows of medical tourism when some of these airline related travel problems resort, and a lot of people will like to come to India. Some of the people have already set up hospital chains in India, etc. There are, for example, medical tourism is being exchanged between India and Africa. I mean, America is very advanced in medical tourism, so I'm not even comparing America, but Africa is a very big market. You can see how the telecom sector is scoping out there, and there's medical facilities that are coming there. And without naming a company as an example, I bought a company which is a hospital company that caters to Africa. Now, it has also surprised me because the stock has done way beyond my expectations, and therefore I may have to revisit my thesis on it. But that's how investing is. Maybe it's somebody else, some bigger player has discovered the company and is going, gaga over buying. As another example, cybersecurity. We are all becoming so dependent upon every single transaction on the phone. The government took cognizance of leakages and went after social media handles and so many things. But cybersecurity will become a very large business, and there may not be many listed players there. But for example, in the unlisted space, there are companies, and I've personally also invested here in the unlisted space. Tomorrow, if there are opportunities that open in the listed space and they're affordable, and the companies are doing something credible, not just basically making a statement that we are in cybersecurity because of a name change of the company or some obscure product that doesn't matter, then I will try and move my money there. And I'm specialized textiles now with FTAs in place. The textile companies can have a completely different trajectory when they outsource for some of the large companies in the world. And textiles is not a sector that is being overtly priced because it's sort of by and large, people have taken it to be a commodity. But now let's rewind. So were all the metal stocks. They were all commodities. And so were the power stocks. But look where they led you. And the question is that if I can find an opportunity in a textile company where the promoter is interesting and he's got something unique and he's got the ability to bag a bigger contract or a higher operating profit margin, and he's already done a capex, which is not showing out in the production that he's doing, then it may be a great opportunity. And maybe even specialized chemical stocks like amines, it's not so easy. It's not just basically easy to set up such a large mine facility. And they were massively beaten down in the March and even before March. And some of those were great opportunities there, and I have to find my next. So there are always endless sectors to find. And market, if it is really bad, suppose we had 3 days of what happened yesterday, then I'll get up and I'll only look at my bank balance and say that I already had a pre-list in my mind. And if anything has fallen in that radar, I'm good enough for it.
So assuming that you didn't own any of these stocks that you just highlighted, from hospitals to data centers, wires, cables, specialty chemicals, would you still buy them at these prices?
Yeah, see, now in cables also, there is a movement away away from a basic cable company into specialized cable. So let us assume that somebody today is able to solve the problem of fire. We've now we find that buildings catch fire and there are hazards and many other things. And he comes out with a solution which is more of a anti-fire solution, and which basically needs innovation. It doesn't have to be just that the wire doesn't catch fire; it is that the building doesn't catch fire, as an example. If there is, or somebody gets into specialized railway and says that as a result of the quality of the cable, the braking system in the railway stands altered, and maybe the railway wagons don't topple off or anything. Maybe they've created something of that sort, or the load factor in the railway is increased, and therefore they can disseminate more air conditioning without increasing the power cost or jeopardizing. As an example, then I will study the technology and say that does it have scope for orders. And that is what has happened in the, for example, the segment relating to anti-collision devices in railways, where I was right about one company and wrong about the other, but then I put up a tweet apologizing for the fact that I did not understand the second one better and I should have done more homework. But so be it. That's how you learn. And if I find the capabilities intact, then if they're reasonable, they are. And if they're not reasonable, it's back to the analogy that I will put them in my radar and wait for the day when the market wants to give me a better price and maybe nibble at that day. And if I'm wrong, then I'll nibble lower also. But I don't believe that you should not buy stocks, for example, at 52-week lows. The question you should ask yourself is if a stock is at a 52-week low, does it have a better opportunity ahead? And if the answer is yes, then you are very lucky that you're getting a stock at 52-week low.